go. All right. Thank you for the great introduction, and I appreciate the opportunity to talk in front of everybody and kind of just explain insurance. So hopefully we can make it simple for you, find a way to save some money and make sure that you're covered properly. Didn't know that about the old owners here. I know we met with them and we had to convert a commercial kitchen into desk space for our account manager. So it looks very different. Got rid of the giant industrial coolers that used to be here and everything. So it's definitely a different world now than it was back then. But exciting. So my name is, again, Mike McGroarty Jr. I am co-owner with my sister of McGroarty and Bradburn Insurance, previously owned by my father, and before that owned by my grandfather, who started in 1926 with one insurance company. And on Saturdays and Sundays, he went around to people's houses and collected home and auto, not a lot of auto in 1926, but went around and collected premiums from people for their insurance. And nowadays it's a little different from that. And the exposures in the world obviously has changed even in the last 10 years from where we were, and insurance is constantly evolving. So we're just going to get into it. I'm going to break down the types of insurance. I'm going to talk about some ways that you can save some money on your insurance and some coverages you should look at, and the ways to shop insurance. So please interrupt me at any time if you have any questions whatsoever. Or if you want to leave a chat, I will we'll take a look at that kind of as we go. So, all right, there we go. So insurance is just a way to transfer risk. A lot of times people think that insurance agents are here just to sell insurance. That's just one of the ways that we help transfer risk. Part of our job is actually to help limit risk for customers from the unexpected, as well as the stuff that isn't unexpected, how to reduce it or eliminate it, as far as work injuries, auto accidents, things along those lines. So insurance, it provides payment of claims for damages, but it also provides defense coverage in the form of investigations, attorneys, and occasional expert witnesses. And I think that's an important thing for people to realize, is that especially from a liability standpoint, in today's world, you can be sued really for anything, and the cost to defend yourself from a completely false claim is rather expensive, and insurance helps take care of that risk and charge for you. So every small business needs insurance. How much, what type, it varies. It really comes down to the type of business. There's some things that everybody needs, but what a good agent does is, or how to find it, first and most important step is to find an insurance agent you like and trust to help you through the process. And part of that is them asking the right questions. There's basically three ways to buy insurance nowadays. There's direct from the insurance company. Those are the ads you see. They primarily target home and auto, motorcycle. You know, we've all seen the Geico and the Progressive ads. That's where you call into their 800 number, talk to one of their employees. They sell you an insurance policy, and then you never talk to that person again. Next time you call in, you talk to somebody else, and the next time you call in, you talk to somebody else. If you have a claim, the only person you're talking to is somebody that works for that insurance company. There's no third party helping you out unless you go out and hire a third party person from there. The second is through captive agents. Those are people that represent generally one insurance company, or primarily one insurance company. They're great. They definitely have their spots. They're definitely more focused on home and auto or personal insurance, including motorcycles, ATVs, personal umbrellas, boats. They do some commercial insurance, but they're generally a little bit more limited. Definitely don't like startups most of the time. In fact, I get a lot of referrals from captive agents for businesses that start or just starting out, especially contractors nowadays. And then the next is independent agents. So independent agents represent multiple insurance carriers. We here have direct contracts with over 35 different insurance companies. And that provides us the opportunity to shop your insurance, because they don't all write everything. There's certain types of businesses that everybody likes to write, so a lot of companies will write it, your run-of-the-mill business, but it also provides us to do some specialty things like habitational business, meaning apartment buildings, rental properties, is not always an insurance company's favorite thing to do. And then we also have access to brokers who go to a marketplace called the excess and surplus lines, and they write business that the standard companies that we have contracts with won't write, generally higher risk business. So it allows independent agents are able to quote with multiple carriers for you to find the right coverage at the best price. It also allows them, if there's a change with a company, because they do cancel business sometimes, they have we have other options. We can also at renewal time shop it out to find make sure that the price is still good, especially if a company has some changing in pricing. So this is a big slide with a lot of information on it. I just wanted to kind of show you, this isn't even all the policies, but it is a big chunk of them. So the first four you'll see here: business owners or package policy, commercial auto, workers' comp, and umbrella are kind of the core policies. They're the ones that pretty much every business has. A business owner's policy or package policy combines general liability and property into one policy. We can get a policy that is just a general liability. We can get a policy that's just a property. But as far as combining coverages, adding additional sublimits and little coverages in, the business owners in the package is the way to go for almost every business. Commercial auto, it's auto cover. Well, I'm going to go into those a little bit deeper down the line. So those are the core ones. What gets added on from there is what we're seeing, and it's evolving on a constant basis. And this is because claims are coming. It's because of changes in the world, whether it be technology, whether it be viruses, that things are changing all the time. So the biggest one that we're seeing now, the next two are, but employment practices liability coverage. We'll talk about that a little bit later. Cyber we'll talk about later. Professional errors and omissions we'll talk about later. Those are three big ones that are expanding and becoming more and more important. The ones that I listed here that we won't really get into as much: directors and officers coverage. This is protection for directors and officers of a corporation. You often see with public corporations, you see it with nonprofits, you see it with associations like homeowners associations. If any of you are part of one of these, you definitely want to make sure that the association you're with has a directors and officers policy, because that protects the directors and officers if they are sued personally because of a decision they make for that association, nonprofit, or corporation. But it's also available for private companies too, because sometimes they have multiple owners and they don't always get along. Flood insurance, you know from a personal side, it's also a commercial side. Pollution's becoming a bigger issue specifically for contractors. This is, if you're liable for a pollution loss, it can be as simple as a truck tips over and the gasoline pours out of the gas tank in an accident. But you see it more on job sites where they have big diesel tanks. And generally it's the government entity or the government, local government has regulations to clean that up, or the DEP has regulations if you have one of those situations. So it pays the cost to clean up those pollutants. Bonding is another aspect of insurance. It's guarantees for a third party. You see it a lot with contractors where they have to get a bid bond in order to bid on a job, and then a performance bond once they have the job. And it's an insurance company or a bonding company guaranteeing that work will be done. And if it's not, they will pay to have somebody else do that work because that corporation or person failed to complete their contract. Health insurance, everybody knows about that. We actually teamed up recently with a health insurance agency, and we're becoming one because we wanted to provide that option for our clients. But I am not an expert in health insurance. I feel like health insurance is its own world compared to what these other lines are, which is called property and casualty insurance. But group insurance does start from 2 employees and up, you can get group policies now. There's a lot of regulations when you have over 50 employees, but there's a lot of flexibility when you're over 100 employees. As far as these UPMCs, they negotiate a lot more and do a lot, have a lot better options the larger you are, but that's constantly changing. And then the last one would be life insurance. A lot of people have that personally, but it's actually very important for businesses. A lot of businesses buy key man. If you have a great salesperson or a great manager or great employee that does all of your roofing work, for example, a lot of people will buy a key man policy on that person. Reason being is that if something happens to them, there's going to be extra costs for that business. They're going to have to hire maybe 2 people to take that one person's spot. They're going to have to turn down some work for a little bit while they find somebody to replace that. So we see key man a lot, and then buy-sell agreements, which is if, when you got 2 owners, people don't think about this, unfortunately, till it's too late. I know the FIFIC Law Group knows all about this, but when something happens to one person and they have a buyout clause because they're an owner of the business, it's hard to come up with that money right away, and life insurance is a way to fund that. So those I just kind of brushed over quickly. We'll get into these other ones a little bit more. So commercial general liability, that is coverage for bodily injury or property damage. If somebody gets hurt on your property, if you hurt somebody while working, contractor drops a hammer, everybody has a general liability exposure. I could be out visiting a client and put my suitcase or my briefcase down, someone trips over it, they can definitely sue me for that, and this protects me. So it follows me wherever I go. It's not just limited to my business location. And that's also true for homeowners policies. A lot of people don't think about that, but that liability in your homeowners follows you as well. It also protects for property damage. So contractor is putting a roof on and they take the roof off and a giant storm comes through and just floods the inside of the house. The roof isn't covered because that's what they're working on, but it pays for that property damage to the rest of the house. Crane operator is operating a crane and accidentally hits a car. We see it with painters all the time who are painting a house or a building and it sprays all over the cars in the parking lot. That's property damage. And added into that is personal injury and advertising injury, which is more, instead of having a bodily injury or property damage to something, somebody sues the business because of something they said about a competitor or about an individual that they felt disparaged them.
I'll just jump in right there and say that the single best piece of advice I ever gave to a client was they were getting sued for reputational claim, a defamation claim.
Mm-hmm.
And I told my client, I think you probably have coverage for this in your insurance. And of course he did. The insurance, the defense costs, the attorney defense costs were in the hundreds of thousands of dollars. I think they may have spent more defending the case than the result of the case was. So it was a huge thing for them to have that. And a lot of folks just don't understand that coverage is out there under these types of policies.
And it's not always out there. That's an important thing to put out to explain that there's certain types of businesses that insurance companies will write that on some, but won't write it on other types. Law firms are an example. A lot of times they don't want to put personal injury on there. We have companies that don't. We don't write law firms, for example, with those insurance companies. That's part of the advantage we have. We have other ones that will. These are additional coverages that are generally included with general liability, which is fire legal liability. This is something people really don't think about. When you are in a multi-unit building, say you're in an office building, the portion that you represent or that you rent, is your territory. You occupy that. So general liability is about third party. So if you or your employees or somebody in your office causes damage to the building, your liability pays for the building except for the portion that you rent. and you get coverage for the portion that you rent under a fire legal liability, because most people are renting, so they don't have property coverage on the building itself, although they should on betterments and improvements that they personally paid for in that unit, as well as their contents, but not for the actual structure. So that's where fire legal comes in. Medical payments, I like to call medical payments your friendly neighbor coverage. In order for liability insurance to kick in, you have to be found negligent. Not for defense, because the defense is trying to prove that you're not negligent, and the insurance company will pay that. But in the event that you are found negligent, you have generally $1 million is the standard that people buy. Medical payments is for a situation where you're not negligent, and what it does is give some type of payment to the person in order to avoid a lawsuit and avoid those defense costs by the company. It's on homeowners policies as well. You'll see it. Example I always give is it happened to us when I was a kid. My neighbor was over. We were playing in the yard. He tripped over a root in the yard and got cut on the knee, required stitches. We went to the medical payments on our homeowners policy to pay the deductible that his parents had on their health insurance. So it was just helping him out, because we're not negligent. The roots are there. That's part of just the world. So it just helps avoid that. And then on auto, I'll get into hired and non-owned auto liability in a minute, but when we get into the auto section, but it is an add-on to the commercial package and BOP policy that's important for people that do not have a business auto. But I'll come back to that. Property. So this is coverage for the stuff you own. If you own the building, you have building coverage on your policy. You would also have contents coverage. Contents is, best explanation I have is you take the building, you turn it upside down, everything that falls out is the business's contents. So when people are renting the location, instead of owning it, then we don't have building coverage on there, we just have contents coverage on. This is obviously extremely important, especially for businesses that have a lot of inventory. If they have a lot of equipment, there's a lot of other coverages other than just the stuff you have in there, but it's the area that I see most people are underinsured with, because they don't understand what they really own. When someone owns a building, we do a replacement cost estimate on it. It tells us how much it costs to rebuild that building. I don't have any tool that tells me how much the stuff costs that you own. The important thing is property can be on essentially two different forms: actual cash value and replacement cost. Actual cash value is the depreciated value of your items. So let's take a roof. A roof has generally a 30-year lifespan on it. If you're 15 years through it and you have actual cash value and you have a loss in your roof, they're going to pay half the cost to replace your roof. If you have replacement cost, they're going to pay up to the limit, but they're going to pay what it costs to replace those items with new items. So you might have something that's 40 years old, say a pair of jeans on a homeowner's, for example. They're going to go out and buy you a brand new pair of jeans. So people underestimate what it costs to go and replace everything after a major loss.
Mike, can I ask you a question? Just jump in here for a sec. So, of course, with COVID, and many small businesses as well, they might not have a separate place of business. Maybe they're operating their business out of their home, right? Or they have a home office or something. Are those folks at risk if they expect their homeowner's policy is going to cover losses, property that is associated with their business? If they have their own inventory that they just keep in the house, maybe it's a salesperson that's operating out of their own home and they keep inventory there. Should that be a concern for folks? Yes,
as well as liability depends, but for property, absolutely, that's a great question. So the way that, let me make sure something's on here. Okay, so the way that property works, business, personal property, or contents coverage is the way the policy reads is it's covered within 1,000 feet of the location that's on the policy. What that means is If you get more than 1,000 feet away, that business personal property is no longer covered. So if you take one of your employees take stuff home, it's no longer covered. Now, and your homeowner's policy, some of them have like a little tiny snippet of coverage for business, but generally they exclude business. It is a homeowner's, it is for personal use only. It is excluding business activities, it is excluding products that are owned by your business. Now, that being said, I'm going to skip ahead and come back one. There's a coverage called inland marine. Often confusing. People start thinking about water when they hear the word marine. But inland marine is a way to cover mobile property. It's a way to cover property that leaves the business location. So most BOP policies, business owners policies, and package policies do give some coverage automatically built in there. We call them sublimits, so lesser limits for items that, for sales material, for computers away from the location, for business personal property at a different location. So there's often some of that built in, and usually for most small businesses, when we explain that to people and it's 5,000 or 20,000, depending on the company, it's more than enough that they need. But when they have more than that, or they have a lot of property that leaves the location, contractors is a great example because they're taking lawnmowers out, or they're taking backhoes, or skid steers, different tools that leave the property, then we write an inland marine policy. And that covers everything, sometimes depending on the wording of it, sometimes all over the world, sometimes just in the continental United States and Canada, just depends on how it reads, but it covers that stuff. It covers computers, because computers are a sublimit and they have different exposure losses, like electric surges that can fry them out that aren't covered under normal policy. We cover it under electronic data and processing equipment.
So this would be, so for in the era of distributed workforces, right? Where you know, you're a company and you send all your employees home and you send all your computers and things of that home with them, you know, you might be wanting to look at this kind of a policy. Or if you've got offsite storage, is that, will cover this?
Well, generally when inland marine, so the cost of insurance, okay, so building is the least expensive to insure because it doesn't go anywhere. People aren't going to steal it. It's only going to burn down. Contents are the next because they're only covering within 1,000 feet, but it's got some extra exposures like theft and, you know, even sprinklers. Everybody loves sprinklers in their buildings, insurance companies do. They protect the building from burning down, but they destroy everything that's inside of it. So contents are a little bit more expensive to insure. Inland marine is the most expensive when you're talking about rate per 100 of or 1,000 of contents coverage. So you want to look at that. So if you have a storage location, my suggestion is always to add that storage location onto the property as another location, cover it under contents because it's a more affordable, and quite frankly, it's the right way to insure it. And then what we often do is we blanket stuff between the two locations, which means if you're moving stuff from one to the other and back and forth, especially businesses that have holiday seasons, we can blanket it across both. That way, if during one time of year, the majority of stuff's in this building, we're good. If another time it's in this building, we're good. And we generally have, those BOPs have coverage for stuff that's in transit. So we talk about that stuff, especially when people are moving. We add some extra stuff on for a temporary period of time, blanket across the new location, the old location, depending on what's going on. So yeah, there's a couple of ways. Most small businesses are sending the computer, the electronic data processing equipment. They should make sure you have that on your policy because it pays for software, which is less of a concern because most of the stuff is cloud-based now, but it's still the cost to get an IT guy to fix that is built into that electronic data processing. And it generally covers it everywhere. So, but you want to make sure and talk if you have a lot of people taking their computers home that are owned by the business.
All right. Thank you.
Yeah. What I want to go back to is the most overlooked portion of property. I will answer the, let me answer this question first on accounts receivable. Accounts receivable is on every BOP policy I have and almost every package policy, it's included in there. sell your valuable papers and records, and there's usually electronic data processing, at least some kind, automatically thrown in these policies. That's why they're really great and the best way to write. Plus, they're non-auditable, especially BOPs are. So that means if your sales go up, the premium doesn't change. But accounts receivable, I'll give an example. We had a doctor's office that had a major fire in it. This is years ago. And there was a lot of, they were a little bit behind on their paperwork at the time of the loss that wasn't entered in the computer properly, and they hadn't billed the insurance companies for everything. Plus, the fire started in their computers, so they lost other computers, and they didn't have a good IT guy. So their data was supposed to be backed up, but it hadn't been backed up for 4 months. So this was a catastrophe on top of a catastrophe, if you look at it closely. The accounts receivable coverage, which we had, I believe, $100,000, and they came pretty close to hitting all of that. The majority of that was spent on forensic accounting to recover, to figure out what was lost and the appointments through some other options that they had and some backups that they found. But that's where the majority of that was. It would pay if there's stuff that you couldn't recover, but the majority of the cost goes into the recovery of it. Valuable papers, just real quick while I'm on it, and records, you see that less, but it does matter. That's the cost to redo your corporation papers because they burn up in a fire, or get new licenses or documents. More stuff's electronic, so it's less of an exposure than it used to be. But a lot of these stuff, when you have a major loss, people don't realize how important they are and the extra money that gets thrown in on these extra losses. Hopefully I answered that question. If you have anything else, just let me know. So business income and extra expense is by far the most overlooked section of the property because people don't think of it as property. But business income and extra expense pays your loss of income if you have a fire and you can't operate in your business. And it's what saves businesses at the time of loss. Because if you have a restaurant, for instance, and you have a kitchen fire and you're shut down for 6 months, business income pays the money that you would have made during those 6 months while you're shut down and rebuilding it. And extra expense pays the extra advertising to get you back up and running, to tell people that you're back, and or advertise. Business income will pay if you go to a temporary location, say you're not a restaurant, say you're an office and you need a new office space. It pays the extra rent for the new office space, because I hate to tell you this, most of your leases say if we have a fire in this property, you still have to continue to pay your rent if we plan to rebuild it. So if you don't want to pay double rent, it's business income that pays that. And the extra expense is just think about all just the little things of forwarding your mail and stuff getting lost, of getting your new stamp, your postage equipment, the cost to get the computer guy to come out and rewire this new location. That's all stuff that comes into business income and extra expense. It's what really saves businesses when they have a fire at their location. And I think it's overlooked. Generally on a business owner's policy, we do it for packages too, we put actual loss sustained on there. So instead of putting a limit in there, it says we'll pay whatever your loss is for up to 12 months after a covered cause of loss. So that is the BOP, property and liability. They're combined together there. Commercial auto is just like personal auto for the most part, meaning if the business owns a vehicle, they have to have commercial auto insurance. If you own a vehicle in the business name and you're insuring in your personal name, you are in a lot of trouble. I see it way more than I wish I did, because not all the personal agents ask the right question, which is essentially when you call to add on a new car, whose name is that car titled under? They don't ask that, and people just think it's fine to add it on. I'm on message boards all the time where people are like, oh yeah, you can do that. Well, yeah, you can do that, but you're going to get into a fight if there's a major loss, because the insurance company and their lawyers will look at it after the fact. So if you have it in your business name, you definitely need a commercial auto policy. If you use it primarily for business, I often suggest that you have a commercial auto policy as well. commercial auto policies can be written in an individual's name if the business operates under an individual, LLC, partnership, whatever entity you might have. And a lot of times we have people who use their vehicle that's in their personal name for business use all the time. We have them lease it to the business, which is just a legal document requiring, it's not really about leasing like you hear in these other vehicles. You get it notarized and it puts the insurable interest onto the business.
Mike, can I make just a comment
Yeah, please.
on this topic? So especially for folks that have a business vehicle that they use that's titled to your business entity, right?
Mm-hmm.
A lot of people, I think, have a misunderstanding about the protection that an LLC gives to personal assets, right? One of the exceptions under Pennsylvania law relates to your liability for your personal actions, even though it was on behalf of your business. So if you're driving a car that is owned by your business and you cause an accident, right, you can still be personally liable for the damages that are caused by your own personal actions, right? Your LLC limited liability veil is not going to protect your personal assets from those claims. And so I think a lot of people don't understand that. They think that if they're driving a car that's owned by the LLC, that they're not going to be personally liable, but they are. And so that's another reason why this kind of coverage is particularly important for business owners to protect their personal assets from claims that arise out of their business.
Yeah, absolutely. And on top of that too is what's important is the definition of an insured on policies, and pretty much all of them. Now, I say pretty much all of them. You get into excess and surplus lines and harder to write business. They're not licensed with the state. They don't file their forms with the state. So because they're writing stuff that other insurance companies don't want to write. But when you have the LLC or corporation as a named insured, it's also covering all employees, officers, directors of that business. So if they're named in that lawsuit because of something that happened with a commercial vehicle while it was doing work, you're driving from your office to see a client, it's going to defend you in addition to the business, which is extremely important. So you want that. Well, let me talk about hired non-owned auto, and then I'll talk about the commercial auto marketplace nowadays. So a lot of people don't own that, but every business has an auto exposure, and hired and non-owned auto coverage is the way to solve that. Even if you have a commercial auto policy that has a vehicle on it, we won't write it without including hired and non-owned auto coverage. We won't write a business owner's or package policy without hired and non-owned auto coverage unless the client signs off that they don't want it, but they don't get a quote without it if it's possible. The business is named in a lawsuit because of a vehicle. It's either hired, you rent a vehicle, or even you hire somebody to drive something on your behalf, or a non-owned vehicle. So an example of that is you tell Jane, the accountant in your office, to go run to the post office before she goes to lunch, and on her way to the post office, she causes an accident that gets somebody seriously injured. First thing that's going to be asked is, what were you doing? Oh, I was running this errand for work. Well, guarantee that business is going to be named in that lawsuit. So this provides liability coverage for that business in those events. And it's just, I can't underestimate how important it is and how often it happens that people just don't realize. Even the owners of the business that are using their personal vehicles, it provides you that coverage that protects you. So on auto, like I said, I was going to talk about personal commercial auto is right now the worst performing line of business for pretty much every insurance company in the world. The cost of repairing vehicles has just gone through the roof. Everybody knows a headlight costs like $4,000 to replace the brackets and everything for a headlight. Every rear end that used to cost $500 because you pounded out the metal and repainted it has 50 sensors in it that need to be replaced and recalibrated. Distracted driving, people on their phones and stuff. So it's a mess, and the claims are just through the roof. So the rates have gone up. across the board, and commercial auto is way worse than personal auto. That being said, companies are still giving us great prices on commercial auto insurance, especially fleets, meaning 5 or more vehicles. We have some that are great. We have other ones that we don't even quote auto insurance with anymore because their pricing is just so terrible. They're basically saying they don't want it. So that's auto. Now we go from the worst performing line of business to the absolute best performing line of business, which is workers' comp insurance. And it's weird, it flip-flops. 10 years ago, every insurance company was like, give us your commercial auto, we want it, we'll write it, they're dropping pricing. No, I don't want workers' comp. Well, boom, it's completely the other way around. Every insurance company wants as much workers' comp as they can get. Part of the reason is they're able to control costs now by having nurses on staff. They're able to get people back to work quicker. So that's part of the reason why they want it, but in 5-6 years, I'll be saying the complete opposite of what I'm saying right now, which is nobody's going to want workers' comp and everybody's going to want, well, they might not still want commercial auto. But so when I talk to people, I say there's 2 insurances that are required by law. 1, if you own a vehicle, you have to have auto insurance for it. That's state law. 2, if you have an employee, you have to have workers' comp insurance. What does it cover? It covers 100% of the injured employee's medical bills if they're injured during work, and it pays for 66 2/3% of their lost wages because of an injury at work after a 7-day waiting period. All the policies, it's a little different. Like auto, a lot of the coverages are regulated by the state as far as what they have to offer and how it's paid if there is a claim, like first party benefits, and there's uninsured, underinsured motorist coverage. Those are auto coverages that are, the state says this is how it works. Workers' comp, there's almost no flexibility. The only difference between one company and another is the price they charge and the claim service that they provide. And generally the better claim service they provide, the better pricing that they have because they're keeping their costs down. The state wrote it, this is what it is. Different in every state. It's complicated. Like the state of Ohio is monopolistic. What that means is you only buy workers' comp from the state-run workers' comp company. There are no independent companies at all selling it in the state of Ohio. Pennsylvania, we're an open market, but we also have the state-run, which is essentially a last resort. They'll write anything. So if you can't find coverage because of claims or the type of risk, you go to the state fund for it. And it is the one that losses and experience matter more than anything else. There's a couple reasons for this. One, it's very controllable. We talk to employees, we talk to our commercial carriers, we get risk managers to come in and help them reduce their chance of risk, making sure they have safeguards on their equipment, making sure they're wearing hard hats, making sure they have steel-toed shoes, making sure they have back braces, they're lifting correctly. Those are all important things that help reduce that risk. So insurance company knows if you're doing those things, you're going to have less losses, you're going to have better pricing on your workers' comp. The other side of it is every workers' comp loss you have, or if you don't have any losses at all, it gets reported to the state, and the state calculates, for larger risk, they calculate a mod. For smaller risk, they calculate a merit, and it's based almost solely on your losses. And the mod starts at a 1, and it can go up, called a debit mod, which means it can be a multiplier. It could be 1.2, so you're paying 20% more for your workers' comp. It can be 2, which is you got a lot of problems if you're there. But if you don't have losses, it can be a credit. I've seen 0.75 where you're getting 25% off of your workers' comp. I'm having trouble keeping up with the chat, so I'm going to finish this and I'm going to come back to it. I'll come back to the chat in a second there. It's hard to do both. So,
yeah, Mike, why don't we take these questions at the end?
Okay.
If you want to just get through your presentation.
Okay, that works.
A quarter till, so.
Okay,
I'm not
sorry.
sure how much more.
Yeah, workers' comp is really important. Sorry, I don't have a clock in front of me. So I'll kind of speed this up from that point. Umbrella and excess liability, that's an additional level of liability coverage that goes over top of your auto, your general liability, your employer's liability. It's a great idea because you can't really know how much you're going to be sued for or how much you're going to be liable for. but it's also required by a lot of contracts. Professional and errors and omissions. So we talked about how general liability was for bodily injury and property damage. It's not if you make a professional mistake in your work. That's what errors and omissions is for. If, for instance, as an insurance agency, we have errors and omissions coverage, which covers us if somebody tells us to add a car on and we forget to do it. Plenty of others. The one everybody knows about, medical malpractice. You hear about that everywhere. That's errors and omissions coverage. The thing is, it used to only be for, you know, attorneys, insurance agents, doctors, those things, but it's expanding greatly. In fact, the biggest one we're seeing nowadays is contractors can buy it if they make a professional mistake on their work, put the wrong shingles on. Cyber liability. Everybody's heard of cyber claims over the last few years. So this, especially last year. So this is really on the rise. This coverage is extremely important, even more so when you talk about people working from home. You see tons of claims, and the main way to get into people's systems is through the email and people stealing login information of your employees. They're logging into their email from their house. So pretty much every cyber liability company requires multi-authentication on your email in order to even write it today. In fact, ours did. Our cyber liability doubled last year in premium, and we didn't have any losses. It's just the way that it is because of the exposures that are out there, and we had to add that in. So there's throw-ins to the BOP. They're not very good. Cyber pays if you're sued, third-party coverage. If you have, every state has different requirements. If personal information is hacked and exposed, and this pays for those regulations for the, if you have to provide credit monitoring, things like that. First party is for yourself, those exposures. And most cyber, which is to me the most important part for clients, covers your money that's in the bank. If you get hacked and someone steals your cash, or they do a fake wire transfer, or they spoof you, which is, you know, I'm out of town and they replicate my email and tell one of my employees to send money. Not that they're allowed to do that. That's why they have to call. We always have double check on everything, and everybody should have not just an email, but a phone call verification on any type of financial transfer. But it protects from those scenarios. Extremely, extremely important right now. It pays for the cost just to repair your computers, because that's the biggest thing, is that people's computers get fried. They'll even pay the ransom, which they don't love to do because it just opens you up for more companies coming back, but they will pay. You know, everybody's heard of ransomware, I think. And last here is employment practices liability. This is if you are sued by an employee or potential employee for discrimination, wrongful termination, sexual harassment, all these different items. This is on the rise more than you can imagine. Age discrimination. Good employment practices include third party, which protects you if one of your employees harasses a client, or if you're a restaurant, somebody comes in to eat and the server makes a joke, or they hear a joke from the back that's offensive. It's your responsibility as a business owner to stop that from happening, and you can be held, and the business can be held liable for that. So employment practices is the way to protect yourself. For the last few years, this has been the largest growing liability claim section. Cyber's starting to take it over, but it's still, I mean, we get a couple of them a month, honestly. EEOC claims that then turn into lawsuits is what we see a lot of. So real quick on ways to save for on your insurance. I think this is the most important part. First off is experience. Insurance companies love experience. They don't like startups. They like to be able to see 3, 5, 10 years of history of your workers' comp, or all of your insurance of losses. The less losses they see, the better they are. With all insurance, frequency is worse than severity. Insurance companies understand that shock losses will happen, but if you have 10 claims that add up to $5,000 is worse than one claim that adds up to $200,000. It's all about less frequency is better. So what that means is, when I talk about startup businesses, there's insurance companies that will not write insurance unless you've had 3 years of insurance history on your business, especially workers' comp. We have companies that don't require that, but you get the best pricing once you get to that point. Be honest, especially with an agent. an agent can solve those problems. Don't try to hide stuff. There's nothing worse than lying and omitting facts, and then a claim happens and it's not covered. So just be honest. Find a good agent that there's things that you tell. If you tell a company directly, they're going to automatically change the policy, even though they don't have to for coverage reasons. An agent isn't going to lie or anything, but they know what you're saying. And sometimes people say, "Oh, my basement flooded," and then the insurance company says, "No, well, no, a pipe broke. It didn't flood. There's a difference." So it's the way that things are said make a big difference. Take your time. It takes time to go to multiple companies to quote it. I have to sell the insurance to the insurance company. I sell your business to that company, which, and this is the last part there, which is how we get the best pricing for people. Home and auto, you put it in, it shoots out a number. All the companies do it that way. There's no flexibility. On commercial, there is flexibility. There's pricing adjustments that they can make based on experience. So selling yourself to the agent and explaining it to them and giving them time to shop it makes the biggest difference in the world. Tell us about the special training you do, your experience, the safety measures that you take. If you have a good agent, like we have a list that we ask people about to get into that stuff, so that we can get that best pricing. Don't shop all the time. There's people and companies that every year send their insurance out to bid. Agents quit working on it. Insurance companies quit working on it. Everybody's time is limited. When they see something 3-4 years in a row and they don't write it, they say, "Forget it. I got better stuff to work on," and they don't anymore. And then you're not getting the best pricing. If something major changes, shop it. If pricing goes way up, we shop it. Every 3 years, that's the time, if nothing's really changing, to take a look at the marketplace and see where it is. And control and limit your losses. Risk management is extremely important. You do that, less losses means better pricing on insurance. And I already talked about the harsher versus frequency. So that's all my information. I'm happy to answer some questions. Sorry, I went a little bit long on that section there, but
That's okay. I can go through some of these questions, but one thing that I wanted to ask first before we get into the particular questions, Mike, is what should a business owner do to assess their own insurance needs? Is there some type of a tool that they can use, something that will help them have a more productive conversation with an insurance agent like yourself before they call in?
Not really. I mean, it's hard. There's nothing. That's what I hear from people all the time is, "I don't know what I need. I don't know." So I always feel like I've always felt like our job is to understand your business and present options to you, and then mold those options to fit your specific needs and your specific budget. And it's really, I believe, up to the agent to ask the questions to understand the exposures that are out there. It's hard for a person to know, the saying, "You don't know what you don't know." Most people don't know. A lot of people don't know about cyber. A lot of people don't know about EPLI insurance, so not a lot about it. So it's really, I believe, up to the agent to ask the right questions. And when I say be honest, sell yourself to those agents, tell all the great stuff that you're doing, because we take that and we sell it to the insurance company.
Okay, great. So let's go through the questions. Here's one from Rachel. I think she's asking a question about property insurance coverage. Is this only for certain people in certain industries, like someone in real estate versus someone who has a cleaning business? I'm sure. Do you understand what she's getting at?
Well, no, I mean, I think everybody's got a property. Well, not everybody, but almost every business has some type of property exposure. When I say property, like we write people that own office buildings. They're lesser's risk only. They're only in real estate. But then we write ourselves. We own this building that we're in here. Now we own it under a different LLC, different insurance policy, but we're not in real estate, but we own this building. We operate in it. So for instance, we have an entity that owns a building that has building coverage on it. Then we have McGroarty and Bradburn's insurance, which has contents coverage for the stuff that we own inside of this. So a cleaning company, we write quite a few of them. They have equipment that they take out on the job site. They have cleaning supplies that go out to the job and at their location. Did that answer it?
Yeah, Rachel,
Yes,
you can.
thank you.
All right,
Okay.
great, thanks. Irina asks if you work in the Canadian market. You want to expand?
I do not work in the Canadian market. I've helped some clients that have some locations in Canada essentially I helped them find an independent agent, complete the apps, but they handle that. Insurance, you have to be licensed in the state you operate in. Canada, you have to be domiciled in Canada to write Canadian insurance. So I can't do that. We're licensed in about 22 states right now. We're expanding all the time. It's called non-resident license in states you're not in. Like we have businesses that are in 6 or 7 states that have retail locations, but we have to have licenses for each one of those states.
Okay.
So Canada, unfortunately not, but find a good independent agent in that area. They have them.
Jimmy asks if someone who is a rideshare driver, should they get commercial auto insurance?
There's a few insurance companies that have added an endorsement to their personal auto policy to provide coverage for the rideshare factor, and that is a more affordable and better way to do it. The big rideshares, the Ubers and the Lyfts, provide some automatic coverage, but there's a couple of gaps that it's a lot to get into. But I would suggest that you go with one of the personal carriers that can add that endorsement on. Safeco has one. I believe Travelers has one. There's 4 or 5 or 6 that have that endorsement now. So it's a more affordable way to go.
Okay. Yvette asks, can you talk a little bit about the coverage that a person who is a 1099 worker from home should have? What would be sort of the basics?
Let me talk real quick about employment for that. Years ago, expensive workers' comp classes like roofing said that they should take their employee. They were like, well, workers' comp's super expensive. We're going to make all of our employees 1099 and no longer make them employees, and we don't have to buy workers' comp anymore. And the state said that's not the purpose. That's not why we have workers' comp. It's to protect those employees from getting hurt. So the first thing as a business owner is that if you have exclusive 1099s, you need to have a workers' comp policy. And a lot of workers' comp policies will charge for them like they would charge for an employee, and you're liable for them according to the state as far as them getting hurt. Part of workers' comp protects the business from getting sued. In Pennsylvania, if you have workers' comp, an employee can't sue you for being injured. There's some loopholes to that, but that's essentially what it is. So that protects you from those 1099. As far as if you're a 1099 employee, depending on what you do, I do usually suggest some type of general liability policy, professional, depending on what you're doing, or having an exclusive contract. A lot of times, like we have some 1099 exclusive producers for our agency, and our policies cover them as if they were employees. So they're covered in that way. But if you're working for multiple companies as a 1099, you definitely want to have your own insurance.
Yeah, I would imagine that's something that is coming up a little bit more frequently with the people being more so gig workers, right? Where they string together a couple of different situations.
Yeah, when you're doing that, you need to have your own insurance. And most of the time, the people you're working for are requiring it.
Okay. Jimmy says that he's hearing more and more companies being sued because their website is not ADA compliant. Is there some type of coverage for that?
Cyber does provide that. I've heard of it a lot. There's some people out there just going on websites and looking for that, specifically in Pennsylvania. There is some coverage for that on your cyber liability from a personal advertising liability section. I don't believe it'll cover it. I believe it has an exclusion in there for internet, but cyber usually has some coverage for those types of suits.
Okay.
Simplest thing is not expensive to change it. I've seen it on the insurance side. The big thing is making it ADA compliant. There's actually some free tools out there that can just be added onto your website to do it, to fix that.
Awesome. Rachel and Yvette want you to come work in their states. So one from Georgia and one from New Hampshire.
I'm licensed in Georgia, but not in New Hampshire right now, but I can always get licensed in New Hampshire. There's no reason I can't. It's Connecticut, Massachusetts, New York, New Jersey. We already are, so why not New Hampshire too?
Right.
Yeah, I'll be happy to talk to you about it. I have some agents that
And
send me
Texas.
business for other states.
Yep.
I'm licensed in Texas. Yeah.
Okay, wonderful.
Yeah.
So any other questions? I mean, feel free to go ahead and unmute and ask if you have a question that we didn't cover for you. All right.
Well, I appreciate you giving me the opportunity, Mike. I sometimes get long-winded because I really do like insurance. I get to meet so many different people in different fields. It's not like I'm just dealing with the same person all day. I'm sure you get that a lot too. You get to learn about different types of businesses. And my favorite part is solving people's problems. When you talk about those questions and how to fix this, I just love doing that. We do cover food trucks, by the way, Jimmy. Thanks for asking. But yeah, so I do really like it. I appreciate the opportunity. My contact information is there. So happy to answer any questions, no obligations on any types of quotes or costs, or if you just have a question, I'm always happy to help.
Okay. Well, thanks, everybody. I mean, please feel free to reach out to Mike, direct your customers to Mike too. If they have any questions as well, you can be a great resource to your own customers by connecting them with somebody who is willing to help them and licensed in lots of different states. So I thank you all for attending. Thanks, Mike, again for presenting. It was really good. And we look forward to seeing you sometime, everybody here sometime soon. Yeah, please check our Eventbrite site for all of our upcoming webinars. I know we have one coming up, I believe, October 10th or 11th on safe driving tips for teens. So if you've got a teen driver, if you know somebody that is a teen driver, we will have a certified driving instructor who will be presenting to talk to you about safe driving tips for your teens. So with that, I thank you all and have a great day.
Thank you.
Bye-bye.